Hi, and welcome to Insight Private Wealth's Investment Insights. I'm Sam Stillone, and I'm joined once again today by Dr. Steve Garth for an inside look into inflation. Steve, I've been seeing a lot in the press lately about inflation. What's actually going on with it at the moment?
Yeah, that's right, Sam. There was a lot of news about inflation earlier in the year, around February, and it seemed to die off, and it's back again now. Yeah, definitely inflation in certain prices. For instance, oil and gas prices are at year highs at the moment, and other prices people may have noticed around the supermarket. There are other inflationary prices around.
Is inflation good or bad?
Yeah, that's a great question. Look, inflation can be good if it's low or relatively modest. And that's why you often hear that the RBA want to keep inflation in a band of 2 to 3%. On the other hand, if high inflation, well, that can be really bad. It means that prices are getting away and wages aren't keeping up with it. So people's spending power gets reduced.
And what's the market's expectations on inflation over the next 12-month period?
Yeah, look, one way to look at inflation is fairly simple way, but it's effective enough, is looking at how 10-year bond yields are performing. Now, 10-year bond yields are not everyone's cup of tea, I know, but you can see in this chart that bond yields were tracking along, and in the first quarter of this year, back in February, they started to rise really quite rapidly, and everyone got very nervous, and market was talking about really high inflation. Central banks kept saying, look, it's all transitory. In other words, that it's actually due to the pandemic and sort of blockages in freight and delivery of services and goods. And that's what's causing the inflation. And in fact, the word transitory was the most searched Google term way back in February. What happened after that, though, is the market sort of fell into line with what central banks were saying, thinking, oh, actually, it is sort of transitory. And you can see how those bond yields have been coming down since February. But now, again, the story is coming back about inflation, particularly around oil and gas or energy prices going up.
And are bond yields good predictors of inflation?
There's a great quote that says making predictions is really hard, particularly about the future. And I think that that's absolutely true of bond yields as well. Look, the central banks, universally, all central banks seem to be saying that, look, inflation is transitory, and they still expect it to be in that target band of 2 to 3%, if you like, the good band, not too hot, not too cold. And I think the market is sort of coming to those realization as well. But that's not to stop the financial press having fun with lots of stories about, inflation.
I mean, if inflation were to take hold, what's the best way of protecting against inflation?
Yeah, so, lots of people in the market will tell you there's all sorts of protection strategies against inflation. But, Sam, the best hedge against inflation is simply to stay disciplined, stay for the long term in a diversified portfolio of stocks and bonds that, is the right mix, for your tolerance.
Yeah, look, Steve, we here at Insight Private Wealth use diversification as one of the cornerstones for constructing client portfolios. And we always encourage clients to actually ignore the noise in terms of what the press is saying, and all these gurus out there, or supposed gurus. At the end of the day, no one really knows what the future will hold. So we do want to construct portfolios using low cost investment options for clients and remain focused on those longer term outcomes. For our viewers at home, just so you know, Insight Private Wealth, we are independent. We're not owned by superannuation companies or the banks or large institutions. We do construct portfolios which are independent of those sorts of biases. So if we can be of assistance to you with regards to your financial planning needs, please don't hesitate to reach out to us. We'd be glad to help.